All right, let's talk Nvidia now. The inventory glut at the company. The shares have actually turned around now. They're up just about 0.25%, and that's even after Nvidia reported disappointing quarterly numbers. Also came out with a forecast that continued to show the company is going to be under pressure. Analysts pouncing on one key point during last night's call, Nvidia attempting to correct for an oversupply of its products. In other words, prepare for maybe some discounts on some of the items and sell-through of their chips and the devices they go into, maybe. Vijay Rakesh is joining us now, Mizuho Managing Director and Senior Tech Analyst. So as you look at what Nvidia is working through right now in this oversupply of chips, are you confident that they can get this situation in hand?
Yeah, thanks for having me on, Julie. So I think if you look at Nvidia, we think they should be pretty comfortable in getting this in hand. I mean, they're guided gaming down substantially. It's back to almost $1 billion revenue for the October quarter, which is back to March of 2019 levels before the whole crypto run. So I think they're taking down inventories in the channel and in-house pretty substantially. So we think that sets them up for a pretty nice bounce into January and into next year, as they have a whole slew of new product ramps coming on the gaming side. So obviously, gaming was one of the expected weakness with consumer being a headwind here. But the data center side for them continues to do very well, and we think that will continue to be a nice tailwind into next year as well. So I think this pullback, or whatever the pullback had been early this morning, is an opportunity to step back in.
Vijay, a couple of your peers on the street are pointing to September 20th. That is their, I believe, GTC conference for Nvidia as a catalyst for the stock. What do you think we'll hear at that event?
Yeah, absolutely. I think it has been a catalyst every year. They obviously will roll out a whole family of products, the 4000 series, 4060, 4080 on the consumer gaming side versus what they have been doing the prior 3000 series. But also data center side, they have a whole new family of Hopper H100 products. There's almost 2 to 3 times better performance versus the prior Ampere. So we should see pretty good response from consumers with the new gaming platform, but also hyperscale data center OEMs looking at the new family of NVIDIA AI products. So,
in the gaming segment, when do you expect some of those members that you've seen kind of plunge into GeForce Now and ultimately get them to this, I believe, 20 million marker that they've now amassed in total membership? When do you expect that to really kind of produce profits more long-term for NVIDIA?
Yeah, I think the gaming side is very profitable for them. The key for them is to get back to growth. And I think the very significant reduction on gaming revenues, right? 1.5 billion last quarter, 1 billion this quarter. So brings it back to 2019 levels, which we think is a pretty sustainable level from where they can start to grow, especially given that they have a whole new product launch coming. So between them having cut inventory, cutting revenue expectations, and a whole new product launch coming, it sets them up for a bounce back in gaming as you go into next year. It'll be slower given some of the consumer backdrop, but the stage is set for them to kind of grow from these levels. So,
Vijay, when we talk about gaming also, I mentioned at the top, there's been some chatter among gamers that maybe there would be some discounts on rigs as a result of all of this and them trying to clear out the inventory. Is that what you see happening as well?
Yeah, I think that's perfectly feasible. I think they are looking to bring in a whole family of products, so they definitely need to clear the channel ahead of that. So I would expect distributors and some of the OEMs to start offering some discounts because they're incentivized to clear off the shelves to bring in the new product. Yeah, for sure.
So Vijay, we've now heard from Nvidia, we've heard from A&D. Which company is best positioned just to see their stock really beginning to work again over the next 12 months?
Look, I think NVIDIA has definitely cut, the outlook pretty significantly. So the setup is a lot better here. I mean, there is still worries around the Ethereum crypto proof of stake, pivot there. But I think if anything, the crypto exposure has been cut quite a bit. Estimates have come down. So the setup looks a lot better into next year. AMD I think is another very solid name. We like it. I think the concern for investors is they also have some gaming exposure. Is there any softness there? But that said, the story on AMD is more about data center, right? They've been taking share and they've been doing well. So that's we think obviously the setup on Nvidia, given the number of cuts, is probably a little bit better. But we like AMD here as well. So
is data center insulated enough to offset what companies like Salesforce, companies like Zoom are talking about within their earnings, saying that the sales cycle that they're seeing among some of their largest business-to-business customers, it has to work through more levels of approval before those spends can actually take place. Is that something that NVIDIA is also going to have to take on as well?
Yes, I think as you go into next year, given that we have had 2 very strong years of data center growth, it is fair to expect some modest slowdown into 2023. That said, where NVIDIA could differentiate is the fact that they have a whole new product cycle ramping, right? So that helps offset some of the softness in the broader CapEx because these are higher ASPs, higher performance, higher dollar content, and so it drives a better cycle for them. It's fair to expect a little bit of softness for sure, given what you're seeing on the consumer side. Obviously it feeds into the entire demand cycle as well. So, yeah.
Vijay Rakesh, Mizuho Managing Director and Senior Tech Analyst. Good to see you. Appreciate it.
Thank you.